Hello, everyone. Welcome to the first live session of the week. If you're new to these, we do these every day of the week at 12:30. Just a 20-minute catch up with what's been going on in the markets and what to look out for in the days ahead. Let me just bring up the risk warning while I'm talking away. It feels like it's quite a slow start today. There's not much volatility this morning, but we have seen the price of oil push out briefly to a fresh 2-month high, but everything else is feeling maybe a little bit flat so far today until US markets open. We saw quite the week last week. On Wednesday last week we had the interest rate decision from the US. No changes as expected. But the big news from that, and the thing that really did spark off some significant moves, was the US Federal Reserve saying that, what did they say? They said they had maybe a more patient attitude towards interest rates this year. So suggesting that maybe we won't see the amount of rate rises in the US that we might have thought in the last quarter of last year. Then on Friday we had the non-farm payrolls, so 1:30 on Friday we did our live session then, and they massively beat expectations again, the second month on the trot. So the market was expecting, I think it was about 165,000 jobs to have been added to the US economy, and we ended up seeing, was it plus 304,000. So that did give a bit of a lift to stock markets, and we saw a strong close for stock markets there, but a bit of a quieter start today. Right, let's get into it. I think the other stuff to watch out for this week, the main event of the week, I think, is Thursday. So on Thursday, we have the latest interest rate decision from the Bank of England and also their inflation report. Again, no changes expected from the Bank of England, but it will be interesting how much commentary they give around the UK economy and their outlook, considering, of course, that next month, so far, we think we're going to be leaving the EU. So it'll be interesting to see what their update is on that. So that's Thursday. Tomorrow morning, we do have European retail sales. So that could be an interesting sort of bit of data. I think it's 10 o'clock tomorrow. Last week, the Italian economy slipped into recession. So it's had two quarters on the run of negative growth. Of course, the Italian economy is no stranger to recession. That's the third recession the Italians have had in the last 10 years, but a bit of negative news there for the European economy. So let's see. And one last thing before we get into this, we do that. I think I mentioned now and again this zero spread thing that we do. We did one last week on gold. The zero spread promotion we're doing this week is on Thursday. And it's going to be on the pound US dollar. So from 9 in the morning till 9 in the evening, there'll be no bid offer spread for pound US dollar. So if you're a client, you'll get like a push notification and an email about that. If you're not a client, then just to open an account to take advantage of it, just go to our website, Capital.com, or download the app, and you can be all set up for this zero spread promotion we're doing on Thursday of this week. Right, let's get cracking. If you have any questions, just type them into the question box thing on YouTube. I'll keep an eye on it, and I'll come back to it at the end and go through. I thought let's start with gold today. It's been an interesting 6 months in gold. We put a video up on Friday of last week on our YouTube channel, and more of a medium-term look, at expectations for gold and the big levels to watch. It's had a solid start to the year. It's up about 3% in January, helped by a weaker dollar, concerns about the wider global economy, political instability, blah, 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 all that sort of stuff. So we have seen the price of gold lifted, but we have seen the last couple of days, all right, it's not dropped back much, but it's dropped back about $15 or so from the highs that we saw towards the end of last week. So I think it's going to be interesting if we see gold, and it's well overdue a sell-off. It'd be interesting, I think, if we see gold under a bit more pressure from here, because this could well be a buying opportunity. Let's see what happens. But this recovery from those August lows is still chugging along. There's sort of solid support from mid-December around about 1235, trend line's 1235. It has been quite overbought. We've been watching this over the last week, but the momentum has still been strong. But maybe you're seeing some cracks appearing over the last couple of days. So I think this is going to be an interesting market to track this week to see where the strength comes back in, assuming it is going to come back in. So for me, the big level on the dailies, these lows from early January, 1275. We were looking at this, I think, about 10 days ago. And again, the third week of Jan, 1275. So that's I think the really big level off the daily chart. So that's what, it's still about $35 below where we are now. So let's see what happens. If we do see it push back down to these levels, do we see the buyers come back in? If you flip it over to a shorter term chart. So if we're watching shorter term levels, I mean, if you are really aggressive, that I think that's from Wednesday night, isn't it? This is Wednesday night when we had that interest rate decision from the US and we saw the market just get lifted on US dollar weakness. So I suppose an aggressive trade, because at the moment it's given back all the gains since Wednesday, an aggressive trade could be to be a buyer wherever we are now, 1310, 1311, with stop losses under 1308, maybe even 1305. So I think that's maybe a short-term level to watch this afternoon. But maybe we'll see it unwind, a bit further. But plenty of pockets of support left on the way up. 1295, and here's that big level off the daily charts, the 1275s. So for me, the recovery in gold is still going. We are 5 months into that recovery. Last week, it hit an 8-month high, so it's unwinding a bit now. So we're expecting to see buyers come back in at some point this week. So I think it's going to be it's an interesting one to watch, I think, over the course of this week. And of course, we'll come back to it every day and see what's going on. But gold's a little bit weaker, looking to see where the buyers come back in. Crude oil, crude oil has pushed out briefly today to its best levels. Let me just drag this over so you can see it. So last week, was it last Friday? 55.77 was the high, and it's gone 55.91. So we've blipped 14 whole cents above Friday's high. So clearly that again, that recovery. This was the old trend from last year where it sold off really hard from October. That recovery from, I think it's Christmas Eve levels, Christmas Eve lows, below $43 a barrel, still going strong. So the price is up about 30%, isn't it, in the last 5 or 6 weeks? The price of oil, again, like gold, it is looking a bit overextended. The oil price, you could argue we're not seeing much conviction when it breaks out to new highs. We're not seeing it racing away. There doesn't appear to be a sort of a fear of missing out driving this market. And again, considering it's risen 30% in the last 6 weeks, it's maybe not surprising that the buyers are a bit cautious up here. It's looking really overbought. We went overbought back here second week of Jan and again, and we've got this bearish divergence thing building up where the market is pushed higher, but our RSI is setting lower highs. Okay, so again, suggests maybe it's running out of momentum. And I think it's going to be interesting. The more interesting thing for oil this week is if it sells off. I think that for me is maybe the preferred thing to happen this week, because we've got so much support left from this rise up. I think the big level, if we round it up to say 50, let's say $50 is the big level for oil on the downside, because it's a big psychological level. But we've got all of these big pockets of support left behind as well. The lows from the middle of Jan, around about 51.30. If you want tighter stops, the lows from last week, so towards the end of last week, around 53. What's that? Friday's lows, 53.5. So if it dropped, $1.50 or a couple of dollars from here, we're right back into this old zone of support. So maybe that's where it starts to get a bit more interesting. You can see it pushed out today, but it's turned around pretty quick, and everything just feels a little bit flat so far this morning. I mean, the big announcement to watch for oil is the weekly oil inventories that come out 3:30 Wednesday afternoon. But I think it wouldn't harm this recovery at all if we had a bit of a sell-off from here, and I think it could maybe give a better place to get in terms of stop losses and bring in maybe some fresh blood into the oil market who may think they've missed out on some of the recent rise. So let's see what happens. But the recovery is still going. If we're looking at sort of targets on oil, we're pushing above these December highs now. The next obvious hurdle, I think, is going to be those mid-November highs. It did look like it was stabilizing in mid-November, spent a week trying to rally, and then just fell off a cliff again. So I think mid-November highs around about $58, $59. Let's say 58 to 60 looks like the next problem area for oil. But I think it would be nice if we could get a bit of a sell-off from here and a bit of support coming in. It would be better from a risk-reward point of view. Let's see with what happens as the week goes on with oil. Let's take a look at currencies. Again, a little bit quiet. The pounds, after having a pretty exciting first 3 weeks of January, it's got a little bit quiet towards the end of Jan. So just to remind ourselves, that the pound US dollar traded as low as 124, near enough, and by the 25th of January was up at 132. So we saw an 800-point range for the pound in January, which is a sizable old range. But you can see over the last week and a half, it's been really uneventful. I think we've got a really obvious level to watch going into this week. So if we pick up on the short-term levels, this whole, I've been talking about it for a while, but that's because it just continues to hold. If we pick up on sort of 130 pound US dollar through to 130.50, and we've seen again this morning, between 10 and 11 this morning, the market sort of dribbled off towards 130.40 and has bounced back a little bit. Nothing too dramatic though. So maybe the interesting thing for the pound is this: if it breaks below, if we see a break below 130, I think that could spark off a more aggressive sell-off. But we've got big support down here at sort of 128. So let's see what happens. But I think because we had so much Brexit excitement in the first 2 or 3 weeks of January, and it's all gone a bit flat now, waiting to see what happens next. And we're seeing that reflected in pound US dollar. But 130, still a big level to watch, I think, for this one. But nothing too exciting over the last few days. Euro US dollar was making it. It's just euro. It's a strange market at the moment. The euro. If you look on this is the daily chart. On Wednesday night, we had that relatively big move on Wednesday night. So we saw US dollar weakness off the interest rate decision. Euro strength has a surge, jumps about 80, 90 points in an hour, and then it's just flat again. It doesn't seem to be able to carry any momentum at the moment, the euro against the dollar. And again, I think maybe Brexit's playing its part here, because clearly it's not just the UK economy that's going to be affected by however we end up leaving the European Union. So I think there's maybe a bit of a waiting game going on here. You can see in the last couple of months, 112 has been the floor, 116 near enough has been the ceiling, and we're pretty much in the middle at the moment. I think there's a chance that it's going to squeeze higher this week. You could argue, and I would argue, that recovery is still just about going. But like the gold price, it's given up a lot of those gains made since Wednesday. I think that the big levels to watch for euro, well, we're pretty much right on it now. I think we've got early Friday morning lows around at 114.30. After that, we've got the pre-interest rate lows ahead of 114. And so 113.90 through to 114.30, but again, a fairly uneventful couple of days. But for me, I think there's maybe a half decent chance that even if it drifts lower from here, we have a little squeeze higher and have a look at 115. But pretty dull so far. Maybe on those retail sales numbers tomorrow, we'll have a bit more excitement 10 o'clock tomorrow morning when they come out. Let's take a look at stock markets. So let's start off with, let's look at the Dow. We were looking at this, of course. We did the live payroll session on Friday, and we were looking at it over the payrolls. That was, I'm guessing, where was the move? Oh, it was here. Let's just zoom in. So we had, this is a 5-minute chart. So it was trading around about 25,000 when those payrolls, just before those payrolls came out. The unemployment number massively beats expectations. Over the last 10 minutes, it rallied 100 points, sold off a bit. But then by 3 o'clock in the afternoon, got a move on. But we ended up again being it was a positive close, I think, on Friday. Actually, was it positive in the end on Friday? Don't know. Maybe not. Actually, not compared to where the payrolls finished up. It wasn't, was it? What was the? Let's have a look. 9 o'clock on Friday. So it closed at 25,047. Okay, so it was a little bit higher. It was ended up so about 50 points higher on Friday than where it was after the payrolls came out, and just fairly flat overnight. But these stock markets do look overextended. The Dow has risen more than 4,000 points since those Christmas Eve lows. So we have seen, a heck of a rally, a heck of a recovery for these stock markets. So you could argue they're starting to look a little bit overstretched. But for now, at least, momentum still appears to be on their side. But you can just see, look at the last 4 or 5 days or so. Hopefully you can see that, just how tight these ranges have been. Sort of Wednesday was the last big mover on that interest rate decision. Again, like plenty of other markets that have bounced back strongly, looking a bit overextended. If you're a fan of the sort of the squiggly lines at the bottom to the RSI, looking quite overbought, maybe a bit of bearish divergence going on. I think it would be interesting if we had a half decent sell-off in stock markets, just to see how much confidence there is in this recovery. For now, I'd still be a buyer of dips because it's a strategy that's worked very well over the last 5 weeks or so. It did poke out to fresh recovery highs on Friday, so that the momentum is still there. But I think for me, it is maybe a bit more interesting if we get a bit of a sell-off. So let's take a look at some of the levels to watch going into today. Well, I think first of all, some of the levels from Friday. The low. What was the low from Friday? 24,970. So 24,970 to 25,000 for the Dow is an obvious one. It's trading at 25,060 now. After that, it's Thursday's lows ahead of 24,800. And that was the low before the interest rate decision on Wednesday. So 24,800 to 25,000 is an area of support for the Dow. So for me, if we saw a bit of weakness this afternoon, and maybe we see a bit of buying come in there, there's maybe an argument to go long with a stop underneath those lows. If it goes crashing through 24,800, it starts to look a bit more interesting. But again, we've got loads of support sort of queuing up from 24.2 to 24.4. So a lack of volatility the last few days. So maybe I think it would be more interesting if we had a sell-off over the next couple of days. Let's see what this afternoon brings. Let's have a look at the FTSE and the DAX. Let's do the DAX first of all, the German market. This has been interesting. I mean, even though US markets continued to push higher last week, the DAX had started doing its own thing again. We'd seen the DAX. I mean, there wasn't really any major sell-offs last week, but it did drift lower. On the upsides, 11.3 to 11.330 has been a problem. We've seen a bit of a flat day today, but again, big support 11,000 on the DAX. So it's currently trading 11,155. If we saw the DAX under some pressure, watch the 11,000 area this week. But if we go back to the bigger picture, that downtrend for the DAX that's been chugging along for 8 months is it now, the DAX? I don't think that's really been changed by the weakness we've seen, the strength we've seen, over the last 5 or 6 weeks. So if the DAX is going to run out of steam anywhere, then maybe this is the place. And I think it's a similar picture for the FTSE 100, although that does actually, no, it's still strong, the FTSE. I tell you that back. The FTSE 100 is having a bit of a move today, maybe because we're not seeing pound strength. If we have a weaker pound, it does tend to help the FTSE 100. Obvious hurdles coming in around about 7,200, the highs from November and the highs beginning of December, but still strong at the moment. But if it's going to start rolling over anywhere, then maybe we're getting close. But like I say, it's all in all, it's a bit of a quieter start to the week this week, and maybe we are going to have a bit of a less dramatic week. So if we had a look at our FTSE, I suppose you could argue, if we plunked our trend line on the FTSE, that it's having a crack at trying to break out. There we go. So the move today, it is sort of breaking out of that, what is it, a 5-month, nearly 6-month downtrend now. So, but for my money, it needs to break 7,200 to really suggest this correction's over. So let's see. Let's come back to it later in the week and see how it performs. Clearly, if US markets start falling, I can't see the FTSE continuing to rise, but let's see what happens. But a quiet start. So for me, the interesting market is gold, because we're seeing a bit of a sell-off in gold. So that's an interesting one to watch over the next couple of days. The currencies are a little bit quiet so far this week, but euro dollar, to see can it hold above some of those lows from last week? Starting off with 114.35-ish, and it's about 7 points above it at the moment. Can these old lows hold the euro and it maintain some sort of recovery? So let's see. So a bit of a quiet one for this week. Let me have a look at some of the questions coming in. So we've got Aussie yen, someone saying Forex doing okay. Let's take a look at that. Let's have a look at the Australian dollar, Japanese yen. That's not a market that we normally look at, but let's take a look at that. Let's bring that one up. What's it look like on the daily chart? It's but again, it's that big sell-off, didn't we? That weird sell-off beginning of Jan for plenty of FX markets. We've seen it bounce back since then. Fairly quiet day though again today, isn't it? Really low volatility. But last week it pushed out to new highs for December, since December, sorry. So we had 1 month, 5 week highs last month. What's happening with Rightmove and National Gas? Have I got Rightmove on here? Just hold on a second. Rightmove PLC. They're up. What are they up? So Rightmove is the UK. What is it? What do you call it? Estate agent, online estate agents, isn't it? That looks pretty dull to me. It's interesting. It's interesting. I think the UK market at the moment, the housing market, because I think there was a story last week on the BBC website. We're seeing the slowest growth in 6 years, and clearly that's going to affect the estate agents. But that's it's bounced back off those December lows from £4 to 4.76, but a little bit sideways, I think, isn't it, over the last 4 or 5 months. Natural gas, always a favourite. Natural gas, one of our most traded markets. Natural gas. Let's just bring that up. What is happening with natural gas? So we had, for longer term viewers of this, we had that absolute crazy move last year in November. For natural gas has come right back. I didn't think that was going to happen. So we had that massive move in natural gas, which there's a great story from back then about an options fund that got liquidated that had been betting on low volatility, and we'd had low volatility for years. It felt like in the natural gas market. And then last year, it went absolutely crazy. So if you go, you can see the dangers of selling volatility. If you Google natural gas options, I'm sure that story will come up. So we had that crazy run up in November. I did think we were going to see a bit of stability and maybe a bounce from these old lows, but it's gone. That really is an incredible move, isn't it? It's almost breaking below the lows from last year. It's right on the cusp of it. Like I say, it's a market I never look at, but we had that gap higher. I thought we'd see a bit of stability ahead of 2.8, and it's just gone lower again. So I'm glad I don't trade it, to be honest. So there's our trend from the mid-Jan, arguably still moving along. Let's just take this out, and maybe a 4-hour chart will be better just to see where we are. I have to say, it does look like a bit of a crazy market, doesn't it? We had that crazy volatility last year, and we've just gone sailing through these old support levels. So really weak. Let's come back to it later this week. But it's a market that just remains under pressure. I wonder why. I don't, like I say, it's not a market I follow, but that is a lot of volatility to see the price halve really bad. We did have that explosive run up into November, and the price has halved since then. So the price went up 50%, more than 50%, and it's dropped by almost 50% since then. So it's it's like the new Bitcoin it's been in the last 3 months. So I don't know why it's dropped so much. I'll do some research before tomorrow's session and find out a bit more. But more sellers than buyers is, I think, the flippant answer as to why it's dropping so much. But that really is just quite incredible, to go sailing back through that old range before it went parabolic. You thought there would have been a bit of back and forth going on there. So let's see what happens. Right, we will wrap things up there. So it's a bit of a calmer start to the week. This week, US markets clearly open at 2:30. It's got an hour and a half to the US markets open. Gold seems the obvious one to watch. Let's see whether buyers come back in, assuming they do. It'd be good to get a sell-off in US stock markets because it's been a little bit quiet over the last few days. So to inject some volatility, that could be interesting. But everything else, a little bit dull. But we have had quite a lot of excitement in January. So it's maybe not surprising, something of a quiet start. We'll do it all again tomorrow. So don't forget, we do this zero spread thing for the pound on Thursday, and you need an account to take advantage of that. And if you don't have one, just go to Capital.com and you can open one. Any questions, drop me an email, david.jones@capital.com. And we'll do it all again tomorrow at 12:30. Thanks for coming along, and hopefully see you then.